Hey, what's up everyone? Hope you all are having a great day today, and if not, I hope I can make your day a little bit better with this video. My name is Frank Mularcik, and in this video I'm going to be doing the first episode in my monthly portfolio review series. I'm anticipating that this video is probably going to be longer than I want to, so I apologize for that, but please stick around to the end to make sure you see my whole portfolio. So I think I'm going to be doing this update video monthly, and it's probably going to be sometime in the last week or two of every month, and I'm going to continue doing the monthly dividend income updates probably the first week or two every month as well. So that should be coming out in a few weeks for September. So if you missed the first one of those for August, you can check that out. There should be a card up here, and check that out so you know what to expect in September. So in this series, I'm just going to be reviewing my taxable account with Robinhood, and that's my smallest portfolio, but it's where I basically do all of my individual stock picking and investing. So most of my other investments are in Roth IRAs and other taxable accounts with Fidelity and Vanguard, and I hold mostly mutual funds and ETFs in there. I can go over those portfolios if anyone's interested, but there's less action in there and a lot less funds, so it's not really worth, in my opinion, to include in a monthly update. I do hold Realty Income O in my Roth IRA, and I do that because the dividends from a REIT, which is a real estate investment trust, such as O, those dividends are taxed at a higher rate, so it's more advantageous to hold those in a tax-deferred account or a tax-advantaged account such as a Roth IRA. So that's why I do that. But aside from that, all of my other holdings are just mutual funds and ETFs. So with this portfolio, I deposit $10 every week, and it's not that much, but I'm in college, so my income is pretty low right now, and most of the income that I do have goes to my 401k and Roth IRAs because I'm nowhere near maxing those out, and I don't know, I just would rather put the money in there until those get maxed out, and then I'll work more on this smaller portfolio in the future. But right now I'm just kind of getting my feet on the ground and starting out and learning what I'm doing with the individual stocks, and then I'll go from there and building that portfolio up. Okay, so right now the portfolio is around $770. It's currently Wednesday, September 23rd, a little bit after market close, so portfolio really took a beating today. As you can see, over the week we're down about 3%. Over the month we're down that same about 3%. Over 3 months we're up about 2.5%, and then in 1 year or all time I'm down about 3.5%. You can see I've deposited $800 there. So just hopping right into my holdings. The first one is Nokia. I don't know. It's been going all right, but it was up around $5 a few months ago. And I actually had 3 shares, and then I sold one around $5.10, I believe. So as you can see, my average cost is about $3.95, so I'm just about breaking even, down a little bit, but I have a limit sell placed for $5.50 for one more share, so if it gets there, then it will sell that, but right now we're still a long way away from that, so we'll see what happens there. Then the next one, AT&T. Kind of a staple in all dividend portfolios, but down over 2% on the day, and my average cost, as you can see, is not good at all. I bought kind of in the falling knife period, you could say, of the crash in March and February, and I bought a whole share then, and then it's just, as it is, it's probably a larger amount of my portfolio than I really want, so I've been buying slowly, but to try to average my costs down, but I don't want to buy too much because then it's just going to be too big a portion of my portfolio. But they have been paying some good dividends, so that's all right. And that's just a general struggle I've faced, is I'm trying to average down in positions, but the positions that I'm down on the most are the ones that I already have enough of, and I don't really want to average down anymore. I just want to leave them be for a while, but I also want to average down because I'm in the red on my position. So the next one here is Amcor, and they're like a materials company. They just do like packaging and stuff. As you can see, they really took a beating today. So I have a little bit of a return on them, about 11%. I think I bought them around April, so they have a good average cost, I think. I have a dividend pending. I'll go over that in the September update. Then my next one is Carnival Cruise Line, and this one has not been going too well either. My average cost was $27.91. I would say I bought this in the falling knife period as well. So I'm down almost 50%. I have a limit sell for $20, and we almost met that limit sell back a little bit a month ago. We were at 18 maybe that was like 2 weeks ago. We were hitting up 19 and above dollars, I think, and I thought I was going to execute, but we've just been dropping since there. So moving on, I have People's United Bank. I think I talked about this a little bit in my dividend update. I'm really down on my position here, down about 33%, but they do pay a decent dividend yield. I think it's around 6%, but I think I'm still looking to get rid of them. So I have a limit sell, $12.69, which is still going to be a loss of some sort, but I just kind of want to get rid of them. But if they don't reach that anytime soon, I think I'll be fine with that because they're still paying decent dividends, but I'm definitely not going to be adding to this position. So next up we have Pfizer. This is a position I'm definitely happy with, definitely one of my more solid companies. Those first companies in the beginning of my portfolio, those are kind of companies I bought in the beginning of my investment, so some of them are not of the highest quality, you could say, and I'm still kind of dealing with the repercussions of that. I just didn't really know what I was doing at the beginning. So Pfizer, I really like this company, and I mean they're working on the vaccine and everything for the virus, so that could help them out. They've really been beaten down a lot recently, but I have a pretty good average cost around $34, so I'm still up about 5% of my position, and they pay a decent dividend, so I think maybe I should get that dividend next month. I'm not really sure, I forget. So I'm up about 5%. I've steadily been adding in when they've been dipping. So yeah, just a good company overall. Next up is Coca-Cola. So right now my average cost is 42, so I'm up about 15%. Coke, there's not much to say about it. It's a really solid company. I mean, their payout ratio is getting a bit high, and they don't have nearly as good dividend growth as Pepsi. I think their dividend growth is around 5.5%, and Pepsi's closer to 8.5%. But I don't know. Coke hasn't recovered nearly as much as Pepsi has. They're still down a decent bit. They were around $60 before the crash, and they're around $50 now. And I think Pepsi has recovered a lot more, so I'm not sure why that is, but it's interesting to look at. Maybe just because they are more on like drinks, and Pepsi has a lot of snacks, so that might have helped them out in this case. Moving on, we have Exxon. I think Exxon is a good company, and I mean, I'm not bearish on the oil industry as a whole in the next 10 or 15 years. I think they're still going to be around, and I think Exxon and other players are going to be trying their hardest to enter that renewable space, but just recently with the pandemic, it's really been hitting them hard, and there's a lot of people thinking they're going to cut the dividend, so I think that's kind of tanking the price. So honestly, if they do cut the dividend, I personally don't think the price is going to drop all that much more, because like recently, the last month, they've been dropping a ton, down 15% or almost 17%, sorry. So I sort of feel like that dividend cut is already priced in if it happens. So we'll see what will happen with that. I think if they're going to declare a dividend, it should be sometime soon. No, never mind. They just paid in September, so it wouldn't be until December that they next pay. So we'll see what happens with that. But I'm happy with the size of my position right now. It just dipped below my break-even point today, so that's all right. But I'm going to leave it at that, even unless it goes like way lower. So that's Exxon. We'll see what happens with them. Cisco, I'm happy with Cisco. I like them as a company. Again, I mean, everything's beaten up a lot today, so down 2.5%, but that's all right. So my average cost is around 35.5, so I'm up about 8%, which I like. I like the size they are in my portfolio, almost 7.5%. That's a good, comfortable number for me, so not much to say about that. I'm just going to leave it where it is. Next up, we have Aflac, and as you can see later, I might want to trim some Aflac, but again, I have a pretty decent average cost at $32. I kind of bought probably in April maybe, so I got a good discount there. They pay a good dividend. They're a solid company, so we'll see what happens. Looks like they actually recovered a decent bit in post-market today, which is interesting. Southern Company. I really like Southern Company. I'm a huge proponent of nuclear energy. I just think that it's so underrated, and I think a lot of the people that know energy know the power of nuclear, and they are believers in it, but I think the problem is just like the general public. They aren't, I guess, educated, and so they don't understand all the safety measures in place, and that it's really pretty safe nowadays. So this is my largest holding. I almost have 10% of my portfolio, but it is my only utilities company. So I really like Southern Company, and they pay a good dividend. I'm down a little bit in my position, but I'm fine with that. Doesn't matter to me. Next up is Leggett & Platt, and I'm almost up 50% on my position. You can see here my average cost was around 27. I remember when I bought in, it was always around like 30 or 33, and it just kept fluctuating around there, and then it dropped a bunch, so I bought some, and then a little bit after I bought, it just spiked up a ton. Like, it's just been on a tear the past 3 months. You can see here in the past year. Yeah, I think I bought in somewhere around here, and then it just spiked up a ton here. So I'm really happy with my position, and they pay a good dividend. So yeah, Leggett & Platt is a good company for me. And Carrier Global, percentage-wise, this is my best performing company. They're around $30. They just IPO'd. Well, I guess they didn't really IPO. It was spin-off basically from, I forget what the original company was, but it spun off Carrier Global and Raytheon. I know the original ticker was UTX, but they spun off Raytheon, RTX, and then Carrier Global. So I'm up almost 85% on this position. The dividend is pretty small. It's like 8 cents a share per quarter, so that's 32 cents a year. So that's, right now it's barely a 1% dividend yield, but that's fine. Hopefully they can grow it a lot. I understand they didn't want to start out at a super high dividend, especially during a pandemic, so that's all right. So yeah, my average cost is around 16. I'm up a pretty decent amount, so I'm happy with that. Very happy with that investment. Next is Travelers. This is what I was mentioning when I talked about Aflac. I might want to, since I have 2 insurance companies in my financial sector, I might want to trim one of those, but I really like Travelers. I think I just bought some more today. I really like them under the 110 mark. So that's where I'm at. My average cost is pretty good. I first bought in around 85, I think, so I'm up a little bit. And I have a dividend pending, which we'll go over next dividend update video. So stay tuned for that. Moving along, we have Caterpillar. Just a really solid company in my opinion. Average cost around 125. I've been wanting to add more, but they've just been skyrocketing near all-time highs. They've dropped a little bit. They're around 155 recently, I think, so they've dropped some. I might buy some more soon. We'll see what happens with that. The next, Johnson & Johnson, just another solid company. They were up today because they announced that their vaccine was moving to phase 3 trials, I think. So they were up a ton at the beginning, but they just got dragged down with the rest of the market. So that's all right. I have a average cost is pretty much right around the current cost. I'm down 0.5%, so pretty much breaking even, and they gave me a dividend, so that's good. And then Microsoft, obviously a super solid tech play. My average cost is around 197, which is not fantastic, but it's whatever. I guess it's not. It's far from fantastic, I guess, because it's only up 2%. But you know, it's definitely a dividend company, but they have a lot of growth ahead, I think. So I'll be excited to see what happens with that. And as they grow their dividend, they just announced an increase. It was almost a 10% increase from 51 cents per share per quarter to 56 cents per quarter. So that'll be exciting to see. Right now, I think I only get like 10 cents a quarter, but that should be increasing, I guess, with the dividend increase and as I buy more shares. All right, Air Products and Chemicals, super solid materials company in my opinion. My average cost is pretty good, around 245. I started buying around 235, and then after I was buying a bit, they really skyrocketed up. It was kind of interesting. They've sort of been like, they've just been acting like a tech company as they've been trading, I guess. Like, they've just been going up with this tech boom a little bit, so it's been interesting to see that. And people always get APD confused with ADP, so that's just funny as well, I guess. But yeah, they're a pretty small part of my portfolio, but I'm liking where we're at with that, and that's fine. So I'm up about 15%, and they pay a little dividend, so that's good. Procter & Gamble, just another super solid consumer staples company. There's not much to say about it. They're just so diversified and have so many products that everyone uses every day, like toilet paper and diapers and, you know, toothpaste or whatever. So that's a good thing, is they're just they have a lot of products, and people are always going to need their products. So I haven't been buying much recently. I'm up about almost 9%, but I should probably buy more at these prices. So my last financials here is JP Morgan. I started buying around 100 recently, just a week or two ago, and they've dropped since then, but that's fine. I've bought a little more the past week as they've been dropping, but hopefully if they keep dropping, I'll definitely buy some more. I really like them. They're one of the best banks in my opinion, if not the best, most high quality. So I like them a lot, and I'll be excited to see where they go from here. And then the last one and most recent, as I was hinting at in my last video about why I sold Delta, or not my last video, my second to last video, I did buy Apple. They dropped to around 104, so I picked up some at 104, and then luckily that was a good time to buy because they've been going up since then, and then down some more today, but they're still above my average cost. That's fine. Right now I have less than 0.1 shares, but you know what? It's better than 0 shares, so that's what I always try to remind myself. But Apple is just, what's not to love, you know? We'll see where they go, but I think they'll be pretty successful in the future as well. So yeah, my portfolio is pretty small, but my friend Gen X Dividend Investor, he's often said in his videos that there's always someone with a larger portfolio than you, and there's always someone with a smaller portfolio than you. So even though my portfolio is small, I'm sure there's someone out there with a smaller one. So that's something I try to keep in mind when maybe I think, or I feel embarrassed about the size of my portfolio or something like that. I realize as long as I'm improving, it doesn't really matter. So in the future, I'm going to create a spreadsheet and track my portfolio from month to month, so that we don't have to go through every position. We can just look at that spreadsheet and talk about the changes I made, or what positions I added or took out or something like that. I'm hoping that once I get my portfolio to where I want it, with some of the more lower quality stocks out of there, then I won't really be making any changes. I'll just be adding to current positions, but we're not really there yet. So these videos in the future should be a lot shorter. After I'm done with this video, I'll copy my spreadsheet and make it, not update it, I guess, when I add new positions or whatever. So then you'll be able to see what happens in 1 month, what has changed, basically. So if you're still watching, thank you so much for sticking with me. I know it's been a long one, but before I go, you know I gotta do the quote. So the quote is, if you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. And I would guess that most of you probably know that's from Warren Buffett. And I just wanted to point that out because some of my stocks I violated that rule on. But I'm not trying to make excuses, but I definitely, when I started out, I wasn't the most educated, and I just didn't know how to do research on my own to find out if a company was good or not. So I just kind of started buying stuff, and some of it definitely did not work out for me. So I'm still trying to tweak my portfolio to get it where I want, but I think I'll get there. Thanks for sticking with me to the end. If you enjoyed it, please just give it a like and subscribe. It really helps me out, and I'll see you in the next one.